So, John, when you look at the recently enacted tax bill, what do you pull out as the key elements for how that may shape the economy?
Well, I think one very important element is the consumer side tax cut. So there's a across the board reduction in individual tax rates. About 80% of taxpayers should expect to see a tax cut in 2018. That's going to translate to about $100 a month in an individual's paycheck. And assuming people don't save that money, if they decide to spend it, you could see up to about a 1% increase in consumer spending, which would add a nice little boost to GDP in 2018 and 2019. Now, of course, those provisions expire middle of next decade. But for the meantime, that should, help support growth.
Right. And in addition to that consumer side support, we should also see supply side support to the economy. The lower business tax rates, lower corporate rates in particular, is going to make investment a lot more attractive in the US. 100% expensing for 5 years makes immediate write off of new investment much more attractive than the slower recovery. So we might also see both the stimulative effect of that increased investment in the short run, but also building capacity, making potential output larger in future years as well.
Now, of course, the flip side is all that new debt. So, about $1.5 trillion in new debt coming from this bill before any economic growth effects. If you take into account economic growth effects and you believe the Joint Committee on Taxation, you get about $1 trillion in new debt. And all of that over time will begin to be a drag on the US economy. The Fed's in a rate tightening cycle. They may respond to some of the faster wage growth rates by increasing rates further. You may see the supply of treasuries going up, which means US borrowing costs are going to be a little bit higher. And over time, that could start to be a little bit of a drag on the economy, which is sort of the flip side of these stimulative effects that it's going to have.
Right. So we may have those out year concerns, and those are layered on top of really an already unsustainable fiscal path from before tax reform, both the spending growth we see and steady tax revenues. So we are perhaps accelerating the time that policymakers will really have to step up and address those issues.